What is up? Welcome back to another Credit Card News live stream. I'm Cal Barton. I just want to welcome everybody. I missed you guys last weekend, so it's really good to be back. And I just want to say what's up. Who do we have here? Miss Barton, Danny Boy, F. Davis, Hafa. I see you. What's up? What's up? So let's get started with the news this week. Let's get me on screen here. All right, so credit card balances Our consumers carry $5,900 in credit card debt, and that's a 10-year high. And so credit card balances are up almost 20% from a year ago, according to a quarterly credit card industry insights report from TransUnion. Um, the average balance per consumer rose to $5,900, the highest in 10 years. And not only are balances higher, but more cardholders are carrying debt from month to month, according to another bank rate report. Of those carrying card balances, 60% have been in debt for at least a year. Now, that last little bit, I didn't know that little nugget of information that 60% have been in debt for at least a year. So they've been paying that close to $100 in interest payments per month for over a year. That's really significant. And I covered this in a previous newsletter. Definitely subscribe to the newsletter. Keep up to date on those weekly uh, posts because every Saturday I put those out. Very insightful. And 5,900 is what the average American is carrying in debt. But if you're a FICO score high achiever, which is a term that the FICO scoring company uses itself to term their people with excellent FICO scores, uh, those people are also carrying debt, and they're carrying on average $2,500 from month to month. So even the highest achievers with the most excellent FICO scores are paying interest. So that really sheds a lot of light there. I know a lot of you guys are not carrying any debt because if you're in the credit card community, if you're an enthusiast like I am, I mean, you can tell me in the comment section. Let me know if you are carrying some debt. But most of you are not carrying debt from month to month. You're paying those statement balances in full, and you are reaping all the benefits from the rewards, the points, the travel benefits. Lounge access being able to be given to your friends and family, and you're just taking from the credit card companies, not giving anything back. And that's the way you want to play the game. Next, let's get this up here. So next, credit card and card loan delinquencies pass pre-COVID levels as consumers get squeezed. More Americans are failing to make payments on their credit cards and auto loans. Another sign of rising financial pressure on consumers. New credit card and auto loan delinquencies have now surpassed pre-COVID levels, right? And according to a Wednesday report issued by Moody's Investor Service, the rate of new credit card delinquencies hit 7.2% in the second quarter, up from 6.5% in the first quarter. So listen, these we saw recently where Capital One and even Goldman Sachs, who issues the Apple Card, are in hot water. They're seeing their delinquencies rise even higher at a higher clip because they market and to consumers in the subprime category. And so those consumers, those credit card consumers, are going to be defaulting at a higher rate because they don't have as good a credit score. And so they're suffering, to the tune of billions of dollars in the case of Goldman Sachs with the Apple Card because they've offered that card to so many extra people down to even the 600 FICO score, which is a blessing and a curse. It's a blessing if you are a consumer that they're opening the gates to just about anybody to get the Apple Card, even people below a 600 score, but they're losing tons of money doing that. And we're going to talk about the Apple Card a little bit later. Interesting things going on with that. Credit card rewards still safe as Congress set aside Credit Card Competition Act. And so the Credit Card Competition Act, or CCCA for short, which aim to reduce merchant swipe fees for credit card transactions, has been set aside. And the objective clashed with banking industry concerns, suggesting that fee reductions might impact the funds banks allocate for credit card rewards like points, miles, and cashback bonuses. Despite its initial lack of progress, the CCCA gained attention when Senators Richard Durbin and Roger Marshall advocated for its inclusion in the National Defense Authorization Act. while it wasn't included in that bill, supporters remain hopeful that this CCCA could potentially reappear in the future. So listen, it's always been, you know, uh, my opinion that when a credit card issuer's profits are impacted in any way, that is going to trickle down to us, the consumers. We're going to foot that bill. They're not going to let that go to waste. So either we're going to directly see that impact the rewards that we get, and lack thereof, those rewards, they're going to take it away, or they're just going to spread it out. They're going to raise fees over here. They're going to lower sign up bonuses over there. They're going to take away, the sign up bonuses are, these, we see Chase do this all the time. They'll offer a temporary bonus. And I always see things like that and I say, okay, this leaves them a lot of room, a lot of leeway to be able to make those changes in the next year for them so that they can save money. So they shy away from making things a permanent reward, and they make it more of a temporary 1 year thing so that they can just switch them out and see what's more profitable for them. And we see them do that all the time. Let's make this full screen. Okay, so let me hide that. Just a second, guys. Okay, so the many ways contactless payments are transforming mass transit. So the pandemic caused fears of a doom loop in mass transit systems, which were largely shut down in the early days of the crisis and were slower to recover as the rest of society opened. But many cities used the downtime to install some much needed upgrades to entice riders to return. Payment companies jumped into the fray, deploying ticketing systems that rely on contactless cards and mobile devices. The idea was to reduce the traditional cards that could only be used in the transit networks, replacing them with a cleaner and more open method of ticketing that, in theory, would encourage digital payments at merchants near the transportation system. So, let me know. I was previously living in New York, and I know that they switched over to contactless payment fairly recently, within the last 2 years. Nino, I see you here. If you have you ridden the subway, public transit? Is it all switched over? All the payment terminals? Can you use your Apple Pay or contactless payment? Because I believe they switched that over. So this is happening uh, pretty frequently out there. Next, Greenlight launches credit builder for teens. Now this is new to me. Why teens needing credit builders? It's always interesting to see, what these new companies try to like fit in to their product to kind of distinguish themselves, to see if they can kind of carve out like a niche for their particular company, and they really find some tight spaces to fit, especially for teens, for teen credit builders. Because I feel like if you're a teenager, you would just be an authorized user, or you would be added as a just an authorized user on maybe say an Apple Card account where they let like a friends and family association occur. But Greenlight Financial Technology has launched a credit builder for teens that designed to help parents raise financially smart kids. With the Greenlight Family Cash Card, teens can build and manage their credit responsibly, while parents can set flexible spending limits and get real-time purchase data. This new credit builder helps solve the problem that 84% of teens aged 18 to 19 have zero credit history, making it difficult to start adulthood with financial independence. The company said Greenlight has found that 94% of parents agree that credit knowledge and skills are important for their teens' futures. Yet there is a dearth of tools and resources to educate them about credit. Nearly half of teens, or 50%, also report to have experienced significant financial stress and anxiety. Now, I take a little bit of I just want to pause on the fact that they say that there's a dearth of knowledge out there. I mean, you can just go to YouTube. I mean, we're talking about this every day, right? I mean, there's thousands of YouTube videos out there that are teaching these teens about student cards, about authorized users. I don't think there's a maybe they could say that there's knowledge that's not built into banking apps. Maybe there's not a easy flow or transition where you can just click a hyperlink inside of an app that you already use that's going to teach you. Maybe that's true, but you can easily just Google search it, right? You can go on YouTube and search it. And just about every account, every credit card issuer offers authorized user access. Like you can go into, I use the X1 card for, general spend for my family, and it easily lets you set spending limits. Just about every card comes with that as a standard set of features where you can set up an authorized user as a co-account owner, or they can be an authorized user under you where they don't have like account access and they can't see all their transactions. And then you can set spending limits, and they can set, you can really get kind of a granular restrictions set on them. And so I'm not seeing how that's a big enough jump from what is already being offered in the market. I would love to look more into it. I've seen Greenlight, maybe once or twice, but definitely got to look more into that. Does this seem like something you'd be interested in? Like if you have a teenager, right? Would you be interested in using something like this that's like specifically dedicated to uh, that one objective? Because sometimes it is good to have a product. I've seen cases be made successfully where a company offered a product that was specifically tailored for a singular goal or solution, and it ended up working better for the customers. But I'm not sure that people are looking for a specific solution to I feel like if they have a teenager, they're just going to take their Apple card, add them on, you know what I mean, uh as Apple's version. Apple has to name their put their own moniker on every product they launch, but essentially authorized user. I really feel like that's really fitting the bill right now. So next, American Express partners with Skipify to enhance. American Express has teamed up with the new company Skipify to streamline the checkout process for its customers. Skipify allows Amex customers to link their eligible cards to participating merchants, eliminating the hassle of manual data entry through the partnership. Skipify is able to identify Amex customers via their email addresses and automatically preload their checkout with all their information. The partnership underscores a fundamental principle: reducing friction is vital to a company's bottom line. When customers encounter a seamless and efficient checkout process, they are more likely to complete their purchase, leading to reduced cart abandonment rates and increased revenue for merchants. And I definitely agree with that fact. I mean, you want a seamless process. You want to have as few clicks as possible to get somebody to purchase, right? But I feel like Google has already, handled this personally. And you can disagree with me if you think I'm wrong here, but been using Google Chrome, and it has a option to store my credit card details, and I just have like my most used credit cards stored into Google. So whenever I come to any sort of payment portal, it'll automatically allow me to preload my credit card details into those boxes. So again, I feel like this is a solution that's already been taken care of, been solved. And I know, Safari probably does the same thing on your iPhone. So I'm not sure if this is even necessary. And our fantastic life. Thank you for adding that. I was just about to say that, man. You read my mind. He said I prefer Eno from Capital One. So yeah, I definitely have the Eno Chrome extension set up on my web browser as well. And Eno does pop up. The only time that I'm going to tell you what, only time I use Eno is when I want to sign up for a subscription service, and they offer like a 2-week free trial, 7-day free trial. Sometimes like it's as short as like a 3-day free trial. Then I'm definitely gonna click on Eno, let that preload. And I'm just gonna pick uh, a post, uh, basically a closing date for that card, or a date for that card to turn off. automatically for the next day, so that I'll never have to remember to cancel that subscription. Because listen, how many times have you been, gotten by that ploy? They want to get you in the door on a free subscription, then you forget to cancel that subscription, and then they bill you. And even if you try to call in and just say, "Hey, I forgot," they're going to say, "Listen, it's against our policy. We can't do anything about that. We can't refund you the money." So that really solved that issue for me. All right. So next, okay, bodegas put on notice as Visa fights back on card fees here. Hold on, swipe fees. And so let's make that larger. The world's largest payment network is making changes to how it deals with merchants who want to charge customers extra when paying with a credit card. In recent months, Visa lowered their maximum amount retailers can charge consumers using the firm's cards. The company has also started sending in-person auditors to ensure stores are complying with its rules when levying such surcharges. Visa's moves come as a growing number of small businesses say they're feeling pinched by the fees they pay to the banks to accept electronic payments. They've increasingly turned to card surcharges as a way to cover those costs, which are also known as interchange fees. And guys, if you don't know, an interchange fee is basically a 1 to 3% fee that the payment processors and banks or credit card issuers, both of them, they charge the merchants this 1 to 3% fee. So whenever you go in and buy something at a bodega, for example, and it's $10, they're going to be charging them 1 to 3% of that transaction. So um, and that is something that happens every time you swipe your card. So there's I've seen so much in the news about this battle going on for market share here, even with Apple, which we're going to talk about later. Every time there's a new entrant into the market that wants to basically take a slice of that pie, and they want to, Apple with the Apple card and Apple Pay, they charge their own fee, which is significantly lower from the merchants as well. And so there's all this complaining, all this jostling, trying to get those fees reduced. Of course the merchants don't want to pay those fees, but the flip side of that is that us as consumers, we're going to buy more when we use a credit card. We're going to buy significantly more. So those purchases are going to go up, and we're going to be transacting even more. So they end up making more money. They just get charged the fees, which I guess nobody's really happy to get to pay fees, right? But if it's basically an investment for your business, I don't think it's kind of a no brainer to just accept credit cards. Oh, Nino, thanks for the comment here. You said Nino, who's in New York, by the way, guys. I caught my local bodega merchant charging me extra. They just passed it on to the consumer. Yeah, it's tough. I believe the law is that you cannot charge the customer extra if it's a debit card purchase, but if it's a credit card purchase, then you can. I think in most places charge less, and I see this often in New York at the gas station. They'll actually charge 10 cents less if you pay with cash or debit. And I at that point I was like, yeah, I used to just swallow that and just pay with cash, but then I started going to another gas station, and it was just it was relatively close, and I just had the option to. I went to another gas station, and I got I was able to use my credit card and get the cash back, and I think I was using the Verizon Visa at the time. So now, next, the Federal Reserve could help instant payments catch on. So this is pretty big news right here. So the Federal Reserve gets a lot of attention when it comes to interest rate decisions. Recently, its role as a bank regulator grabbed the spotlight too. After the wave of bank failures early this year, but the Federal Reserve also manages more than $5 trillion with a T, $1 trillion worth of payments that banks make every day. A couple of weeks ago, the Federal Reserve launched Fed Now, a new payment service that's meant to modernize the payment system by letting people send and receive money instantly instead of having to wait 2 or 3 days for a payment to clear. The thing is, if a customer wants to use the Fed's new service, their bank has to sign up. And so far, only about a couple dozen have. So, this looks good on the surface. Obviously, there's going to be a lot of skepticism when it comes to the government. But I do like the idea of this because right now, if you want to do, instant payments, you do have to rely on Zelle, which, it's not the best implementation and it's not supported by all of the banks, especially if you're with a fintech like SoFi. It's not, innately supported inside the app. You have to kind of go outside the app to the Zelle branded app, and then there's further restrictions on how much money you can send and so that's just not a good experience for the consumer. So I like to see that some more competition in the space, and maybe one day this becomes the default kind of backbone infrastructure of supporting these instant payment transfers, like peer-to-peer transfers. Maybe all the different banks kind of build on top of it. This could happen. Next, Bank of America class action claims company refuses to pay sign-up bonuses to credit card applicants. Now, this is terrible, right? I mean, have you ever been denied an a sign-up bonus? Let me know in the comment section if you've been denied a sign-up bonus. I want to hear from you. Let me know about what you went through, what credit card issuer it was from, and how much that sign-up bonus you missed out on, and what did you do about it? Because I find this pretty interesting. And so the plaintiff, Daniel, filed a class action lawsuit against Bank of America, claiming the bank advertised a sign-up bonus for starting a credit card, but then never paid out those bonuses. New Bank of America credit card customers spent the set amount during the set period of time required for the sign-up bonus, but then were never paid out. The Bank of America class action claims Bank of America did not honor the bonus for those who signed up for the credit cards either in person or via telephone, and they did not receive the bonus. Now that's terrible. Bank of America's got it, but what could be the reason for that? And these sign-up bonuses, usually they're between, for a standard commercial bank like Capital One, Chase, Wells Fargo, they're usually offering between 200, $300 if it's like a once a year promotion. So we're looking at $200 multiplied by at least thousands of people this probably happened to. Yeah, Cheryl. Hey, how you doing, Cheryl? You said never been denied. Okay, that's good to know. Yeah, I'm gonna be honest with you. I think I was denied. I think that I missed out on a bonus with one of my City Custom Cash cards because I don't remember seeing that hit my account. And I think I was just like concentrating on so many other things at the time that I didn't go back and in a reasonable amount of time and go and check and call in and see, hey, where's my bonus? Because I believe I signed up through Credit Karma and I was supposed to get like a $300 sign up bonus at the time. And I don't recall seeing that hit my account. Definitely listen. You definitely got to stay on them because they will just like this lawsuit is stating. There are instances where you're not going to get paid out, and so you definitely got to stay on top of these things. Maybe put in an Excel spreadsheet or something like that. Oh, Nino's got a one for me. You said Capital One did a bait and switch on me with a bonus. Never again with the Quicksilver card. Yeah, well, listen, it had to be Capital One, right? Yeah, man. It didn't happen with my experience with my Capital One Quicksilver. They definitely paid me out, but man, I'm sorry to hear that. Yeah, that Capital One did you dirty there. Mm. So, Block, I believe that's Block sues Mastercard and Visa alleging inflated merchant fees. So this is exactly what I was talking about earlier. These merchant fees really are just a point of contention for these companies and for the merchants. These they're constantly fighting over. Okay, what are the size of the fees, who gets the fees that are being charged, because they all want to be that person, that intermediary, that third party in the middle that's just siphoning off little, small amounts of money from each side. Because guess what? Those small amounts add up to very large amounts of money, billions of dollars every single year. And so Block is accusing payment card networks and their member banks of charging inflated fees and using their market power to sustain anti-competitive process. Block alleges a lawsuit filed July 14th that member banks involved with each network colluded to sustain network fees, calling interchange, or they're called interchange fees, and at a level above that would be tolerated in a competitive market. The complaint cites as honor all cards policy that requires merchants to accept all cards, regardless of the issuing bank, on the Visa or MasterCard networks. Since merchants are not allowed to pick and choose which cards they accept, the issuing banks do not compete to win the favor of merchants, according to the suit. And member banks agree to default fees set by Visa and MasterCard, so they are not incentivized to undercut each other on price and instead benefit from inflated fees. The suit argues as a result, there are no forced driving interchange fees down, and merchants have few options for avoiding them. So I feel like us as the consumer, we really went out when with this policy of honor all cards. Because I mean, just think about how bad of an experience that would be if you went into a merchant and they only took Visa or MasterCard. I know there's actually one big merchant that does that. Costco does that. They only take Visas, which I'm not even sure how they're able to do that. If you know how Costco is able to do that, and that how that's like, lawful, and how they worked out that setup, let me know in the comment section. I have not seen that explained yet, but for the most part, you walk in anywhere, they accept Visa, MasterCard, Amex, and Discover. And so just imagine if every merchant that you dealt with, every business you did business with, that you had to use a different card, or maybe you had to, migrate over to a larger, card, like with Chase. Maybe maybe Chase was accepted at way more merchants than Discover was. I couldn't imagine having to go through that. Also, I saw is really, I've been seeing this question so often on the forums, and I definitely wanted to address this. So it says, what's the point in having $100,000 in limits if you can't spend it? And so that's a little short sighted, right? This is a short sighted question because they're they think that all you want to do is have a big limit just to look cool, but it's really more tactical. It's more strategical than that. And so I found the best answer here. It says, uh, this guy says, currently I'm carrying a $10,000 balance at 0% with a $200,000 total limit. And so that's exactly equal to me. On the personal side, I'm carrying a $200,000 available limit, right? But this guy's carrying a $10,000 balance because he has a 0% interest promotional period. Usually credit cards are going to offer you 0% interest when you sign up for, let's say, a year, 15, 18 months, if you're lucky. He said it'll be paid to zero before the promo expires. And you want a high limit so that using a few grand doesn't tank your score. All right. He says, because what happens when you are when you're maxing out a credit card, or not even maxing out your card, if you're using a significant portion of your credit card limit, that's going to raise your credit utilization rate. And so when that utilization rate goes above 10%, it starts to step into less ideal territory, and you start getting hit with negative points on your credit score. The credit bureaus don't want to see you getting even close to that 30% that you see kind of around the internet all the time. You definitely want to stay in the single digits. So what that higher limit allows you to do is that gives you more headroom to spend like you normally would, and even spend on larger purchases or spend on a vacation that you're going on. Maybe you have to go into the $5,000 or $10,000 range to pay for the whole thing for the month. but you don't want that to negatively impact your score in the coming months because your utilization rate went up too high. And so having a higher credit limit just gives you that extra buffer to work with so that you can actually use your limit freely. And so he also says we use our cards for everything except the mortgage. And now you can actually use, there's actually a card that you can use for your mortgage now. It's the built card. That what well not I'm sorry, I misspoke. You can use that for rent. You cannot use it for a mortgage. You can use it for rent. But this guy's saying we use it for everything except the mortgage. Literally, our entire budget goes through the cards. So that's what we call transacting. So he's transacting his entire budget through credit cards. If I had a $20,000 limit and my total utilization would never be below 50%, and I want the points and rewards, so that's why. So this is a really good, really succinct explanation, and you definitely want to always be seeking higher credit limits. Always be seeking higher credit limits, and I actually give you a really good credit limit increase cheat sheet. That's linked in the pinned comment of this live stream. So check that out below. And you also get access to my weekly credit card newsletter. And we're going to talk about that in a bit. But first, let's talk about Apple, right? So this is going to lead into that. Credit card issuers are driving for deposits, a back end strategy for liquidity. So this is kind of some inside baseball, and this leads into what Apple is doing and how they're winning so well in the finance space right now. The word for the day in banking is liquidity. So several top credit card lenders offer savings accounts to increase deposits with large swaths of customer relationships. Well-designed strategies to respond deposits can expand the cardholder relationship and improve bank liquidity through increased deposits. A recent trend by credit card banks is to offer a high yield savings account. When we've seen that all over the place, right? Especially with fintechs. You know, SoFi is offering like a 4.5% APY on their savings account right now. It's a lot lower for their checking account, but the savings side, they're offering 4.5, and I'm definitely taking advantage of that at the moment. And so the fintechs are doing that really heavy. You might not find a branch bank on every street corner, but these institutions have mastered the art of fast money movement, ACH, and direct deposit. A Discover online savings account will pay you a whopping 4.3%. At Capital One, you will find a high yield rate of 4.3. American Express high yield savings account slightly behind that at 4.1. But listen, again, SoFi is offering 4.5. There's a Bread savings account that's offering like 4.8. It's super high right now. So listen, if you're still with the brick and mortar bank like Bank of America or Wells Fargo, Chase, and you're in one of their standard accounts and they're offering you 0.001%, you're getting nothing. Especially let's say you have $100,000 and you're saving up for a house. You want to put that into the highest yield savings account so that you can get at least a few $1,000s back. I mean, that's your money. You can easily just move that money to a high yield account, and now you're earning $1,000 in a year's time, and you still have that money safe because it's FDIC insured. You definitely want to make that move, and this is definitely a hack. This is one of the really deep strategies that you can employ to do what we call relationship banking. And the reason you want to do this is because it's going to help you increase your credit limits, because it's going to help you improve your relationship with your bank, especially if you're with a credit union, by making direct deposits is a really good way, because you're making consistent paycheck deposits into that account. And banks want you depositing into their account because it increases their cash flow. It puts more money into their vault so that they can, invest in different ways. They can lend it out to other people and make more money for themselves. And what they can do is use it as working capital. So banks, they want liquidity, especially now we're in a kind of a shaky economic time right now. They are doing this, increasing their savings account rates to get people to make more deposits. And I can see that working. You definitely want to, I said this in a recent video where you want to reverse engineer what the banks want to see. The banks want to make money. So you want to identify what is making the banks money, and also what are the banks marketing. And 9 times out of 10, we're going to see a bank marketing uh, direct deposits. That's going to always be a heavy requirement for getting their most premium features for their accounts. It's going to be a requirement for getting their sign-up bonuses. PSCCU is one that I've been a part of and working with, and I just signed up for their account. They're offering a $300 sign up bonus. They're behaving in the exact same way. They want you direct depositing money on a frequent basis because it increases their cash flow and it makes them money. And so whenever you make them money, they're going to be more willing to lend you more money. They're going to be more willing to approve you for that next home loan at a better rate, better terms. They're going to be more willing to approve you for the next credit card when you maybe were on the fence, and they're going to be more willing to extend more of a credit line. So instead of getting a $5,000 limit, you might be up for a $10,000 or $15,000 limit. So it's really going to set that bar higher for you when you're depositing and when you're behaving like they want you to behave. So that's what you want to remember. But this definitely leads into what Apple is doing. Apple is doing the same thing here. And we see Apple Card sees savings accounts top $10 billion in deposits in just 15 weeks. Now, the Apple Card is so interesting to me, and what Apple is doing, because in the credit card enthusiast space, I feel like they get a lot of hate. And I believe that they get too much hate. Just because they're not a traditional card, they offer more kind of, what they offer is obviously more mainstream. And they came out of the gate with like next day cash back, which was largely not, still to this day is not readily available. I think only the SoFi credit card is the only other card that comes to mind that does that. I know there's a few others out there, but the fact that they reached $10 billion in deposits in 15 weeks is huge. Now, Apple does have a large footprint. They're the number one company in the world, and it's so funny to see the way that the credit card enthusiast space treats it is kind of negative, I would say. And then as a whole, if you look at just all of the regular people out there, all the general public, they've been eating it up. They've seen a lot of signups, and that partly is probably because of their low FICO score requirement. You only needed a 600 score to get in the door, so that definitely let people kind of sign up easily. Now, it says less than 4 months after Apple launched a high yield savings account for Apple Card customers, it's reached more than 10 billion in deposits. And users must have an Apple Card to access savings accounts through Apple's banking partner, Goldman Sachs, which made the feature available in mid-April. Nearly all customers, or 97%, have opted to automatically send card rewards they earn with each purchase directly to that associated savings account, which pays 4.15%. Now, admittedly, this is a good rate, but just let's think about this. How much in rewards are going to be, how much are you going to be earning in rewards? It's going to be a small amount, right? Because you're only earning 2% when using Apple Pay. You're only earning 3% when buying using Apple Pay for Apple products. So it's not a lot per person, but because they have so many signups already, it's adding up. And we can kind of see what Apple is doing here. They're just layering on more products to just create this kind of whole ecosystem. Kind of, Apple is really attacking the banking industry hard, you know. So I'm sure that the competitors out there are watching what Apple's doing very carefully, because they're slowly rolling out new banking products, and they're looking less like a hardware tech company, and they're looking more like a service company providing, and a finance company here. And then to follow up with that, it says Apple now the world's biggest fintech disruptor. So since the introduction of Apple Pay in 2014, it's hard to believe it's been that long, right? That Apple Pay is introduced. It's been almost 10 years. Now it says the services it offers now extend beyond payments and include both long and short term buy now, pay later credit savings, identification, credit rebates, and tools for merchants to take card payments. For a service that doesn't get a lot of attention, Apple Pay is a strategically important element to the company's future plans. That's clear. The company quite clearly has plans to build even more blocks onto their overall offer. Its recent acquisition of Credit Kudos gives it a chance to take more control over payments, approval, and processing, potentially reducing its reliance on payment processing companies. More immediately, there's some expectation that Apple device subscription services may appear. So, listen, Apple is coming for, I think, everybody's lunch. Apple is going in all directions, but especially on banking. And when I looked into Credit Kudos is what they offer and bring to the table is taking people's banking data and using AI and using their own algorithms to make more quality decisions on somebody's credit worthiness outside of a traditional FICO score and FICO reporting. So more of these fintech companies are trying to find their own ways of gauging somebody's credit worthiness without using the FICO scoring company. It's really interesting to see how this is coming up. But Apple is definitely trying to make their own inroads, and Apple Pay does take a small percentage fee from merchants as well, so that's costing them more money. But Apple's getting, as you can see, Apple's just piling up more and more revenue streams from their finance department, and they have so much cash to burn that they can go years, even if it's not profitable with Apple Card. They might be taking profits from other parts, or they might be looking at a longer time horizon to recoup that investment. Now, Free Game, thanks for the question, Free Game. You said, so does Goldman Sachs keep the savings accounts when it sells the Apple Card? That's a good question. I would assume that it would go to Goldman Sachs because I would go to. I'm sorry. I believe that would probably transition over to Amex if they ended up working with Amex, because Amex does have a banking division, and they could handle savings. But I'm pretty sure that they wouldn't split that up. That doesn't really make sense to me. But we have to wait and see. I'm really waiting to see what happens with those rumors. Like, are they going to actually sell off the Apple Card uh, contract over to Amex? And actually, do you want to see that? Let me know in the comments. Do you actually want to see that go through, where Amex actually buys the rights to issue the Apple Card? And guys, just want to let you know, the if you want to be a part of a 3,000 subscriber group of people in the credit card community, join the newsletter. I just put one out today, and it was about what credit cards you should have by FICO score. And so it goes all the way up through your credit builders, all the way up to your premium travel cards, and which cards you're going to want to have. And also why a 680 score is so important. It's a pivotal FICO score that you want to have to get access to multiple different credit products that you have access to, that you really want to strategically sign up for once you hit a 680 FICO score. That's a critical point where you're actually able to apply for the vast majority of credit products, but there's three in particular that you want to pay attention to, and definitely take a read on that. Those come out every single week, and you can sign up in the pinned comment below. So, F. Davis, what's up? You said Amex would do a better job with the Apple Card. I believe I agree with you. Goldman Sachs doesn't seem to have too much experience um, kind of handling these products. Goldman Sachs has two cards. They have the GM Rewards card, and I believe the business card, and then they have the Apple card. I believe that's it. And I feel like the Apple card, maybe Apple has a lot of hand in this, but there's a few things about the Apple card I would definitely change. The sign up bonus, you definitely want to make that. Even if they just do a $20 sign up bonus, make it a consistent sign up bonus, please. That's going to entice people to jump in and feel good about it. And but listen, they might want to make it a little bit less. They might want to raise the gate on that. They want to make it a little bit more restrictive because they're losing money letting so many subprime individuals sign up for that card. It's losing them too much money. But yeah, I agree with you. Amex is going to do a better job. They've been in the industry way longer, in the consumer credit card industry a lot longer. DJ Bruce Wayne, what's up? What's up this week? You said this is actually a good move for Amex and the infrastructure they provide. It's a win. All right. I like it. I like it. So let me know if you have the Apple Card. Let's talk Apple Card for a sec. If you have the Apple Card, put an A in the comment section. And what do you like about the Apple Card? I wrote about this in my most recent newsletter. My wife, she has an Apple Card, uses it all the time. I think one of the shining spots of the Apple Card is I think it introduced people to mobile payments, and I think it really had that. It had the effect, the intended effect that Apple wanted. Oh yeah, I see a lot of A's in the comment section. It's a very popular card. It's super, and it has a lot going for it. But um, the Apple Card, the fact that they required you to use it with Apple Pay, people transitioned. They migrated over to using Apple Pay, and it really was a pleasant experience because all you had to do was, swipe up, beautiful interface, and tap your phone, and you could just leave your wallet behind. And so I think people saw the vision, the future in payment, and how payments can work. And so I think it definitely that's a shining spot for people. If for some, they might say, well, I'm used to using a traditional card. I'm going to be able to get the most rewards on the physical card. But I think a lot of people have kind of made the transition and completely just kind of, you know, gave Apple a pass on that. And then also, I think they did a good job on the app. The fact that you could see your kind of your payment history and the categories that you've transacted in. So let's say that you spent $1,000 in a month and you spent $500 on groceries, you spent another $100 on dining out, and then you spent the remaining $400 on gas. It's going to show you a color coded breakdown and easily viewable on your Apple Card. So it introduced a new user interface that I've seen a lot of different fintechs copy that. All right, yeah. Danny said the interface is amazing. Danny, listen, I agree. I agree. Oh, Jason Moore, you said I got it just because of your video. Or John Moore, I'm sorry. John Moore said I got it because of your video. Wow, John. And the thing is, I don't even have the card. But I can appreciate the thing is, I feel like the Apple Card was getting a bad rap because the Apple Card is really, it's not aimed at a person with even an average credit FICO score. The average FICO score is 716. I know it's probably higher than you expected. And that Apple Card, you only need a 600 FICO score to get in. So it's really offering um, a very respectable card with some really cool new features, new fintech features to the general public, to the masses, everybody with an iPhone, which is most people in America today. Um, and it's introducing them to credit. It's got some pretty cool kind of, you know, features with authorized user access, makes it really seamless. And it comes with a metal card, which traditionally a metal card would only be offered for a super premium travel card. But now you see things like the X1 card off on metal card as well. But yeah, I don't even have the Apple Card, but I felt like I needed to defend it a little bit because it was being compared to so many higher tier cards. Like you can't compare the Apple Card to the Chase Freedom Flex card or the Chase Freedom Unlimited card. The restrictions to get those Chase cards are so much higher. You need a 680 or 700 score by itself. You need a thicker credit profile. Usually you're going to need at least a year of credit history to get in the door with that. They don't show your credit limit before approval, right? I don't believe there's a way to get pre-approved with just a soft credit pull. I don't think there's a way to do that yet with Chase cards. It might be down the pipeline. So these two, they're really in two different tiers. Obviously, the Chase cards are better. They're obviously better, right? Because their physical cards can be used everywhere. They have additional benefits. They got a standard sign-up bonus, obviously, but the requirements are much more stringent. The 524 rule is still around. It might have been relaxed recently, but it's still the default rule set. So the Apple Card's got to be judged up against something that it's competitive to, like the Discover It card, which, I mean, really I can say, and I mentioned this in the newsletter, the Discover It card requires an even higher FICO score to get approved most of the time. So the Apple Card really stands in its own little niche where it lets people with a 600 and some below a 600 score if you do the Path to Apple program. All right, so DJ Bruce Wayne, I want to comment on this. You said personally, nothing I like about it, but to adapt the technology or method to use is good for Amex, and maybe incorporate a point system as well. Okay, I can respect that. And listen, DJ Bruce Wayne, you're in a different part of your credit card journey. You're not building anymore. You're not rebuilding. You might have you might be in the 800 club, right? If you are, let me know if you're in the 800 club. But I feel like a lot of people in the credit card enthusiast niche, we're already kind of in the advanced space. We don't see what the general public is seeing. They just want an easy to use card that looks cool. They can use, freely, and it's fun to use the app that accepts them, right? I mean, so many people have a hard time getting approved for these cards. So it's a card that they can get approved for and they can have fun with, and they actually can see the rewards stacking up on a daily basis. To me, that's huge. I don't think people talk about this enough, that you could see the cash back rolling in as you make purchases. Traditionally with credit cards, you would have to wait until the statement closes to see your rewards. And so you would have to wait the full 30 days plus some to start redeeming and using those rewards. Now with things like these new fintechs with the Apple Card, SoFi, you can start using those rewards, even if it's just a couple cents. To me, it's like seeing shots on goal. It's like seeing the basketball go in the hoop. Once you see the ball go in the hoop, once you see some money accumulate in your account one time, you're like, ooh, I like that. I think I want to pay attention to that. I think I want to open the app and look at that every time I make a transaction. You know what I mean? All right, we got to I might have to send a shout out to everybody in the 800 club. Let me know what your score is, man. 820, man. You flex. JR is flexing on me right now. 820 FICO club. Man, JR, you are considerably higher than me. I can't compete with you. Congrats on that score. Oh, DJ Bruce Wayne didn't quite make it in. I'm exactly at 793. Listen, one day soon, maybe this year, you can creep into the 800 club. John Moore, thanks for commenting again. You said 833. Wow. Listen, I'm gonna have to maybe look into this more, make a video about being in the 800 club for you guys. Congrats, John Moore, on that 800 score. All right, so Lexington Craig, formerly Sin and Madness. I remember you. You said, I'm 23 years old and I have 18 cards and a 730 FICO score. Whenever I tell people I have over a dozen cards and I'm only 23, they get very concerned if I buy something Friday, I pay it off Monday. Yeah, so yeah, you have good credit habits. You pay it off very quick. You definitely don't carry a balance. You pay that statement balance at least. You're uh, you're not being paying any interest, which is awesome. 730 score is definitely good. You know, I found that a 740 score is going to get you in the door on about every car. It's going to get you the best interest rate. Definitely, um, want to see you above a 740, but 730 is great, and you're going to be able to do whatever you want with that. So, congrats on the 730 score. And they're concerned, right? Because most people are, you know, it's here's the thing. Let me tell you something. Most people are very concerned, and they kind of have a good right to be concerned, because if you just Google how many credit cards I should have, you're going to see a lot of different options, and you might come across maybe, you might come across me saying a credit card, FICO score high achiever has 6 cards, and you might think, well, that's the limit I should be at. Well, not necessarily. You might see that a credit card utilization rate you should have is 30%, and they've been saying that for like 10 plus years, if not more. And they're continuing to put out articles that say maintain a 30% utilization rate when that's flat out wrong. If you just go to the FICO scoring company, they're going to tell you high achievers have a 7% and below. You know, a reputable person is going to tell you anything below 10% is good. And I think that there's some bad information out there that's telling people that you don't want to have too many credit cards. It's a bad thing. It's really not. You know, a lot. I think about 18, 19 open credit card accounts, bank issue credit cards. A lot of people in this video chat or in this stream have over 20 credit cards, and they have great, excellent score. They're in the 800 club. So it's not about you. You can have too few credit cards. That's actually more of a detriment, having too few credit cards, but you can never have too many credit cards. That's the big misnomer. That's the big misconception. You can have as many credit cards as you want. It is as long as you have uh, really having a good amount of credit cards is going to show the banks that you have a good credit mix and that you have a high total available credit limit, giving you a great credit utilization rate. And if you maintain a good payment history on all those cards, it's going to give you more chances to show really excellent payment history. And we have some people chiming in here. You says Johnny Jimenez says, I have 29 credit cards and my oldest card is 31 years old. Wow. Johnny, man, you listen, what's your credit score, Johnny? Let me know what your credit score. You have to have like an 850 score with that, because typically a FICO score high achiever has a 25-year credit history, and their average age of accounts is about 10 years. So Johnny, you're definitely over that, and you're in great territory. And 29 cards, I'm sure you're not seeing any sort of hit to your score. As long as you maintain good payment history on those cards, there's nothing wrong with having 29 cards. It's absolutely fine. And I've seen people that want, I know one credit card YouTuber who wants to have over 50 cards. And that's perfectly fine. Perfectly fine. It's really good stuff. And JR said only 15 cards, and oldest 2 cards is 21 and 22 years old. And that's all, and that's exactly why you have an excellent credit score, because you have a very long history with your cards, and that's actually one of the toughest uh, parts for a young person to get, because they just don't have enough time and experience in the credit card game to achieve those older accounts that's required to get into the 800 club. And what's up, Richard Calaby? You said the world record holder for number of credit cards is 1,500 credit cards. That is That's insane. That's literally, I can't fathom how could you accomplish that. That there's got to be some sort of that's a system right there. That guy put together a standard system to applying and getting approved for cards to get to that number. That's insane. Free Game said, I found out when I got into the 800 club, the 800 on the personal side is just the beginning. So what do you mean by that? Can you expound on that free game? Why? How is it just the beginning? We can talk about that. Oh, Jewel Clark, I want to shout you out as well. Congrats on 838. Man, I'm a little listen, I'm getting a little envious over here with these high credit scores. I can't believe I'm low man on the totem pole here. Congrats on that. And Richard Calaby said 807. Man, we have some really high scoring people in this live stream right now. I'm in good company. I'm in really good company. They say you don't want to be the smartest person in the room. And you don't want to be the person in the room with the highest credit score, right? You want to have somebody say, "Okay, I want to have some people above me that's going to tell me how to do it. What did they do? How did they achieve success?" Oh man. So guys, it's getting late. I just want to say thank you for hanging out with me this weekend. We're going to be back even stronger next week. And I'm going to have the studio fully set up. I'm just getting everything moved. So this is just temporary, but just bear with me. I'm going to get everything set up. Be back next Sunday, same time at 7 p.m. All right. Everybody have a great night and have a good start to your week.